$200 billion. Anthropic just bet it all on Google. The information broke the story yesterday. Anthropic just committed $200 billion to Google Cloud over 5 years. Multi-gigawatt TPU compute capacity comes online starting 2027. Read the number again, $200 billion. From the maker of Claude to the maker of Gemini, the model Claude is competing with $200 billion. Plus, read the comparison. The largest cloud commitment by Microsoft to OpenAI ever publicly disclosed, $20 billion. Anthropic just signed a deal that is 10 times that in one stroke, with the company OpenAI is supposedly trying to beat with the help of Microsoft. The number is the story. Engadget summarized the information's reporting cleanly. The deal was signed in April. Multi-gigawatt TPU capacity, the cited source, a person with knowledge of the matter. Anthropic and Google both declined to comment. Alphabet shares moved up around 2% in extended trading on the leak. The market read it as bullish for Google. Read this carefully. The $200 billion Anthropic commitment represents more than 40% of Google's entire disclosed cloud revenue backlog. 40%. Google's investor presentations now require a single startup to remain solvent for the cloud business case to work. That is no longer a customer relationship, that is a counterparty risk. And on the Anthropic side, the company's annualized revenue is roughly $19 billion. The Google commitment is 10 times that. A growing private company just signed a 5-year purchase order 10 times its current run rate with capacity that does not start arriving until 2027. Read what that means for forecasting. Sherwood News had the cleanest market read. Alphabet shares rose roughly 2% in extended trading on the leak. 2% of a $3 trillion market cap is $60 billion of market cap created on a single contract leak. The market is rewarding Google for finding a backstop the size of half its cloud business. But that is not even the biggest part. Story 2. The contradiction nobody is naming. 1 week ago, we covered the headline that Alphabet is investing $40 billion in Anthropic equity. Today's news is that Anthropic is committing $200 billion to Google Compute. Read the math. Google sends $40 billion in, Anthropic sends $200 billion back. Net flow from Anthropic to Google, $160 billion. Read the structure carefully. The $40 billion equity investment from Google is not really an investment. It is a financing fee on a $200 billion customer purchase order. The same way a bank funds a borrower so the borrower can buy the bank's products. This is not unusual in venture financing. What is unusual is the scale and the fact that the borrower competes with the lender's own AI model. And the same structure exists with Amazon. Amazon has put roughly $75 billion into Anthropic across multiple investment rounds. Anthropic is committed to $100 billion at AWS over 10 years. Net flow, $25 billion from Anthropic to Amazon. 2 of the 3 largest hyperscalers on Earth are both equity holders and customer concentration risks on the same name. At the same time, added up, $200 billion to Google, $100 billion to AWS. $300 billion in total publicly disclosed compute commitments, against $19 billion in annualized revenue. The unit economics of a frontier lab are no longer a model business. They are a financing structure with a model attached. And the line nobody is saying out loud. If Google's hardware roadmap slips, Claude's roadmap slips. If Google's pricing tightens, Anthropic's gross margin tightens. If Google decides Gemini is the bigger bet for its own portfolio, Anthropic's compute capacity is exposed. The risk does not show up in a benchmark, it shows up in a contract. Story 3, pull back to the last 72 hours, Monday, May 4th. Anthropic announced a $1.5 billion Wall Street Services joint venture with Blackstone, Hellman and Friedman, and Goldman Sachs. The distribution, Tuesday, May 5th. Anthropic shipped 10 finance agents and a Microsoft 365 plugin. The product, today. The $200 billion Google Compute commitment becomes public. The infrastructure, 3 days, 3 legs of the same stool. And the line we used yesterday is more true today. This is the S1 in motion. The agents are revenue. The Microsoft 365 integration is multiple expansion. The customer logos are diligence material. The $200 billion Google commitment is the supply guarantee that lets the bankers underwrite the deal. The decoder said both Anthropic and OpenAI are heading to public listings later this year. 3 days of news just gave the bankers the model they needed. And the cost line Engadget put in the open. Anthropic's projected 2026 server costs alone are $20 billion. OpenAI's are $45 billion. 2 private companies projecting $65 billion of server spend in a single calendar year. That is more than the entire annual revenue of Salesforce on servers alone. And here is the line that should reframe the entire cloud category. The information's reporting confirmed that combined Anthropic and OpenAI cloud commitments now exceed 50% of the $2 trillion total backlog at AWS, Azure, Google Cloud, and Oracle combined. Half of the entire hyperscaler backlog is 2 startups. Read that twice. Story 4. Pull back further. Cloud computing as an industry just changed shape. For 10 years, the hyperscaler thesis was diversified demand. Thousands of customers, dozens of segments, one platform. As of this week, the largest cloud commitments on Earth are concentrated in 2 private companies. The hyperscaler stocks are no longer industrial cloud bets. They are single-name AI lab credit exposures. Results since framed it as customer concentration risk on both sides. Anthropic is concentrated on Google. Google's cloud backlog is concentrated on Anthropic. The same is true for OpenAI and Microsoft. The same is true for OpenAI and Amazon now. Frontier model labs are not portfolio bets. They are single contract bets. Either side blinking blows up both income statements. And the editorial line we have used before: if you can only own one piece of the AI story, own the picks and shovels. This week confirmed it. $2 trillion of the long-term revenue in cloud is now contractually committed to 2 AI labs. Whoever sells the picks and shovels to those labs gets paid first. Whoever owns the labs gets paid maybe. And one more line that should make the bankers nervous. On the customer side, Anthropic now has JP Morgan, Goldman, Citi, AIG, Visa, Citadel, BNY, Walleye, FIS diversified. On the supplier side, Anthropic has Google, Amazon, and Broadcom, 3 names, 2 of them are on the same chip. The customer base is wider than the customers expect. The supplier base is narrower than the suppliers admit. Pull back to the meta. The headline today is not $200 billion. The headline is that the frontier lab category just stopped being a model business and became a financing structure. The agents are real. The customer list is real. The compute is real. And the company underwriting the compute is the rival. McKinsey did not lose this round. Gemini did not lose this round. Claude did not win it. The cloud bill won it. 90-day forecast. 1. Anthropic discloses the compute commitment as a contractual obligation in pre-IPO documents. 2. OpenAI announces a comparable Microsoft Azure commitment now that the exclusivity is gone. 3. Amazon announces another investment to keep the relationship symmetrical with Google's. The investment and purchase loop becomes a documented business model. Watch the Wall Street research desks publish a new credit metric for it before the end of the quarter. 12-month forecast. 1. Anthropic's pre-IPO document discloses compute obligations greater than $400 billion across all hyperscalers. 2. The first frontier lab credit default swap is priced in the institutional market. 3. The hyperscalers begin disclosing concentration risk by named AI lab in their 10Ks. The boring corporate disclosure forms catch up with the headline. Here's the unpopular bet. Owning Alphabet stock is now the cleanest way to be long Anthropic without buying private shares. 40% of Google Cloud's backlog is Anthropic. Anthropic's growth is now contractually Google's growth. Read that twice. The cleanest AI lab exposure on the public market is not the lab, it is the cloud the lab is locked into. If you ship products built on Claude this year, 3 things to track. 1. Read the next Alphabet earnings call carefully. The cloud backlog disclosure is now your supply chain. 2. Watch the Anthropic AWS split. The customer who can switch hyperscalers fastest has the most leverage. 3. Pay attention to TPU capacity reports. If 2027 slips, your roadmap slips. The chip is the schedule and the line to take with you. The frontier lab category is no longer a model business. It is a financing structure with a model attached. The labs raise capital from cloud vendors. They spend it back at the same cloud vendors. The cloud vendors book the revenue. The lab books the loss. And the public market gets to value the loop. We will be watching closely. That is the May 6th briefing. $200 billion to Google, $100 billion to AWS, $300 billion committed against $19 billion of revenue. We will track the IPO disclosures, the Microsoft counterpunch, and the first Wall Street research desk that prints a credit metric for this category. For ANN Live, this is AI News Now. Proof, not press releases.